Good morning. I am pleased to be here today to join SP in welcoming you and to introduce our first panel, a fireside chat on current global macroeconomic trends affecting our capital markets. From my vantage point in regulating the asset management industry, there are really few topics as important as the one our distinguished panelists will be discussing this morning. Global macroeconomic trends have resulted in big changes in the asset management industry and more broadly in our capital markets. Both market participants and regulators are operating within a new and evolving landscape. One striking aspect of this landscape is the level of global debt, which now stands at approximately $250 trillion, or 320% of the world's GDP. In the United States alone, outstanding non-financial corporate debt is nearly $10 trillion and almost 50% of the US GDP. Now, the increase in debt is driven by various factors, and I'm sure the panel will be delving into that. For example, monetary easing by central banks has resulted in interest rates at historic lows. Further, global regulators have encouraged banks to hold highly liquid assets and less corporate debt, especially lower-rated debt. Our chairman, CLayton, will be joined by Gary Cohen, former director of the U.S. National Economic Council, and Glenn Hutchins, co-founder of Silver Lake Partners. The accomplishments of these individuals speak for themselves, and I will refer you to the program for their detailed bios.
I hope that our investors and consumers understand that we will have technology issues. They will happen.
Yep.
The question is how we deal with them. Are we prepared? Do we have the resiliency? Can we move forward? But that's a good shift. Crypto assets. What do we think about crypto assets? I mean,
You have a problem with your left hand today?
Go ahead. For once, you're to the left of me.
So, yeah. Wow, it's hard to get to the left of you. Crypto assets. So look, I think you got to break this down because we conflate crypto and blockchain in America. We think they're synonyms. They're not at all synonyms. So I will be pretty quick on crypto. I am not a real believer in sort of the cryptocurrency world. Glenn may vehemently disagree with me on this, but I am much more of someone that thinks in the United States, we still believe in safety and soundness. We believe in KYC, we believe in AML, we believe in audit trail and some regulatory oversight. And the crypto assets that are out there are sort of the antithesis of that. So to me, they are going to be tough assets in the United States. That said, so take the currency side of it out. The technological side of it is unbelievably important and is going to be part of a huge evolution that's revolutionary in our business. And you're already starting to see what the blockchain can do and how the blockchain can be used in all industries, but it is extraordinarily relevant in financial services, in consumer credit, in areas where we as a financial service country, we as a capital markets country, we'll use it day in and day out, and I think it will have enormous impact across the entire spectrum. I think if you're not thinking about it really broadly when it comes to financial services, you're missing enormous opportunities, and there are enormous amount of companies out there in each of these little silos trying to perfect and figure out exactly how they make it work, and it's really kind of simple. And Glenn got on this topic, and I'll just elaborate on it for a minute. You know, this old idea that we created all these data warehouses and we kept all this important information on individuals and on their creditworthiness and on their financial information, we kept it in data warehouses. Well, that was cutting edge technology when it was built. But the bad people out in the world, they knew those warehouses existed, so if you wanted that information, you might as well go to the place where all that information is stored. That's why people robbed banks, because that's where the money is. If you're looking to steal identities, you go to the place where all the identities are held. In the blockchain world, you can get rid of all of those data warehouses. You can create the identity real-time instantaneously, have it created, and then have it disappear. And so think of the ability to create things on a real-time basis as you need them, use them, and then have them go away, and you can get real-time information, not the information that was sent to the warehouse. So there's just enormous amount of applications for this, and whether it's digitizing securities, moving securities, fragmenting securities, it just has enormous use. So I am very, very bullish on what it's going to do to the industry, and this goes back to where we started, how the SEC, the CFTC, the Fed, they're going to have to understand that this is going to happen with or without you, and it's better off to happen with you. Understand that this is going to happen with or without you, and it's better off to happen. This is going to happen with or without you, and it's better off to happen with you.
Okay, a couple things. All that is accurate. Let me just give us a different, slightly different perspective on it. Let's talk first about digital currencies, and let's talk about crypto stuff. Digital currencies today, roughly 92% of all currencies in the world is digitized.
You're talking about fiat versus crypto?
Just currency.
All right, so break them up though. So look, I totally believe in digital fiat.
Yeah, that's
so
right.
Digital dollars, digital yen, digital euros. I don't. Those aren't crypto to me.
That's right.
That's digital fiat. So I just want everyone to understand that we're probably in more agreement.
No, not agreement. I'm just saying. Okay. I'm sort of dividing these two things apart,
Fine.
just like you just did. So the first thing you have to understand is that moving to a digital currency is a very straightforward thing to do. People call them, and the two things can interact, of course. Some people call them stable coins. Some people call them, the Chinese are working on their own. Taking that thing on paper and turning it into a digitized thing is a very straightforward thing to do, and today, the vast majority of money in the world is already digital because it's just electronic entries in banks and central banks.
Yep.
So the notion that it's some big revolutionary thing, I can take 8%. By the way, Ken Rogoff's book, The End of Cash, says that the 80 to 90% of U.S. $100 bills are used in organized crime and tax evasion. So the thing that's most useful to the bad guys is cash. It's the ultimate sort of anonymized security. But anyway, so that's a straightforward, easy thing to do. It should be done, and we just got to get there.
Agree.
Right. That's the end. That's easy.
Amen.
Now, if you talk about the whole crypto kind of world, I got to this from the kind of the payments thing because I've been looking for a way in which we could take the cost of payments down by 99%, the way we've taken down the cost of trading in securities. In the payments world, we use we oftentimes use the term of the payments rails. There's the credit card rails, there's checking rails, there's the FedWire rails. Goes around. So to understand how I think to think about the cryptocurrency world is there are three parts of it: the blockchain, the token, and the protocol. And the three of them operate together to create one solution, one integrated solution that has the capacity to revolutionize the way we move things of value around the world. Let me use a railroad analogy to make the point. The token is the equivalent of the boxcar. It's the thing into which you embed something of digital value that needs to be moved from one place to another, from one part of a blockchain to another. The blockchain is the cargo invoice, is the invoice in the cargo manifest. And the rails is the protocol. And you have to think about all three as one integrated solution that enables you to accomplish the purpose of moving anything of value around the world at the speed of light at no cost, the way we talk about email today. People who just talk about blockchain are talking about something very interesting, but it's a piece of enterprise technology that's an advanced database, and a private blockchain unconnected to the global, to the Bitcoin or another digital currency blockchain is the equivalent of the intranet. Remember when we had intranets to begin with, where it was really cool, you could do internal communication with people in your own companies, but it wasn't really until those intranets were connected via the internet protocol to other intranets to create the World Wide Web of intranets called the internet that the world changed. The world is going to change in finance when we connect the private blockchains via the Bitcoin or Ethereum or other protocol to the other blockchains in the world, have a global blockchain that's the World Wide Web of blockchains that'll fundamentally change the way in which not only do we move value around the world at the speed of light, but also in which we actually fundamentally change the way in which we compute, because it's the fourth computing paradigm I've experienced in my lifetime, the decentralized computing paradigm. That is the vision of where we can really go with this that's transformational. Now, the first step will be the intranets, the blockchains, as those get deployed. But that's not the end point, that's just a first step. I can go into all that stuff at greater length if you'd like me to, but that's a beginning.
No, look, transformative. I want to go back to something we talked about around monetary policy, which is if this happens, which I say if, I think you're saying when. I get it.
You have a little bit more to do with the if than we do. I'm just kidding. No, and look, Jay, my view is it's happening.
Yeah.
Right. What is the U.S.'s role?
Right. Yeah.
Well, that's what.
Yeah.
I'm gonna go further because
do my right hand. Yes, you're right.
Yes, because we're both involved in companies that are doing it. We'd like to do it here, but we're gonna do it.
Well, let me ask this back to what we were talking about, measuring things in our global economy. This also sounds incredibly deflationary because of the costs that will be driven out of our system. Agree, disagree? I mean, if we're going from paying a percent on a retail basis, 2%, 3% to move things around to virtually nothing.
Well, let's maybe the nomenclature is important. Deflation is not necessarily a bad thing.
People need to understand that. If it's cost savings,
if my being able to buy something at a lower price,
it's just part of the dual mandate. That's what the problem is.
Right, exactly. Right.
No, but let me say,
but the mandate is about real interest rate.
Yeah.
Let me put this at a U.S.
But Jay, the question is, who pays? This is
where I'm going.
Okay. All right. Then ask your question.
My question. You want to be in the position where you've introduced this cost savings across the globe. You don't want to be a taker. You want to be somebody who leads in this area, is I think what you're saying. Because we now do have a global economy, and these savings are global. You want to be a leader. Look, been a leader in many things.
Agree. So look, the issue is, in Glenn and I haven't talked about this before. It's interesting. We're having our first conversation on us both attacking sort of the same problem. The friction in the payment system is huge. It's not seen by the consuming public. It takes away from their purchasing power because they just pay the marked price. But the seller, the retailer, gets 97 or 96 or 98 cents on the dollar when they go turn in their credit card receipts or their payment receipts. They just know they're getting less than par every time they sell you something in a store. If the retail seller could get par, this is the interesting question, would the prices come down 2 or 3%? We don't know the answer. But someone eventually would probably figure that out. With the amount of technology and digital sales and digital outlets, you know it will happen. It takes one first mover.
The power of shopping is unbelievable. Once people can see prices and shop, prices
exactly right. The market has become pretty efficient, pretty transparent. And there are a bunch of companies out there that will basically take your grocery list today and put it in the computer and tell you what grocery store in your neighborhood to go to where your all-in grocery list will be the cheapest. And so you'll get more and more evolution on this space.
All right, well, any last thoughts on this space? I think this has been a tutorial that
I just think that we ought to come back to, at the end, consumer welfare, because that's kind of what we're after, right? And that's not necessarily measured in prices, it's not necessarily measured in productivity, it's not necessarily measured in GDP growth or inflation. But the extent that you are offering something to a consumer that's better, faster, and cheaper than what they had before, that's a good thing.
Yep.
And the way we add it up on our economy and talk about it needs to be subsidiary to that insight. And policy needs to address the change, needs to be able, just like we talked about with crypto, just like we talked about now with Fed policy, it needs to change what tools it uses, how it addresses that based upon how the economy changes in the pursuit of greater consumer welfare, rather than try to use old tools and old frames of reference old lenses to understand the modern economy.
So look, on the consumer policy side, I will add one thing that I think is important. you know, Glenn's talked about a couple of the major problems in the world, whether it be climate or things like that. There's another issue on social side. You know, we all talk about banking the unbanked. A big problem. You know, the payday lender should not exist in America today. It's one of those things that when I drive by them in New York City and see payday lenders, it's kind of shocking to me. In a digitized dollar, stable token, whatever you want to call it, world, we would eliminate payday lending. That has to be stimulant to the U.S. economy. Because if you could basically get your paycheck into a digitized wallet or into a stable token, take that wallet to any ATM, even if you pay the $2.50 ATM fee or pay the $4 ATM fee, I don't care what you know, versus paying 10 or 12 or 15 or 18% to a payday lender to get your money into your pocket, or use your digital wallet at point of sale, you're adding a huge amount of disposable income back into the system. And to me, that is one of the huge potential opportunities and windfalls that comes out of this technology.
And it has to be consistent with the SEC's specific mandate and the government's broader mandate of consumer welfare, social justice, and financial inclusion.
Yeah.
Right.
Let me make
and so thinking about it from that perspective is something we ought to go make sure gets done, as opposed to put impediments in the way of it getting done.
Then one more quick thing. Then you get to what Glenn said about the $100 bills. If you literally could get to a cashless society, you would basically have a society where your income taxes would become digitized. You basically would almost push a button at the end of the year. Everything would go in the system, and you'd hit calc. Or you could hit calc every day and see, and you could end up in a real-time tax society. There'd be no fraud. There'd be no anything in the world. You would have everything go through the system. And then this whole fraud and lack of collection of taxes, you know, people say 30% of our taxes in the United States don't get collected. That's the problem. I don't know if it's true or not, but we can fix it.
But the other thing, and the last thing I would make point you guys understand is that you talk to law enforcement people who have actually spent time trying to track. Why do all the Bitcoin guys get caught? Because the public blockchain is a permanent, unauditable record available to law enforcement. Right? So there's actually a whole law. One of the ways in which you get rid of fraud is that the public blockchain is out there for everybody to see, and the community is the one who validates every transaction. So you can go find exactly who did what when.
One of the things,
So it's very important.
Public service announcement for my colleagues here at the SEC, the women and men. Investor education is so important to us.
Right.
Investor education becomes a lot easier